US President Donald Trump's rollout of the sweeping tariffs on virtually all the US imports have shattered the markets. Investors dealt an emphatic rebuke of his effort to reorder the global trade. About $2 trillion have been wiped out from the S&P 500. The index tumbled more than 3.7%. That's not all. The Dow Jones Industrial Average fell by 3.1% or over 1,300 points. And the tech-heavy Nasdaq plunged 4.8%. As American stock indices tumble, the dollar has also weakened. The US dollar weakened by 2.07% against the Japanese yen and 1.53% against the euro. My colleague Pia Maan is joining me live on the broadcast. Pia, very good morning. At this point, in fact, the concerns remain large on how the value of the dollar remains in red, as stocks also have tumbled after the big announcement by the Donald Trump's administration on the reciprocal tariffs.
Indeed, this is the top story at the moment. Shocking amount. You can see those numbers flashing on our screens. Even as the dollar is weakening, we're getting to know that nearly $2 trillion in market capitalization. Just imagine the number, $2 trillion in market capitalization simply wiped out from the S&P 500, which is one of the three main indices in the US stock market. But if we speak about the damage as such, it's been very, significant on companies whose supply chains are mostly dependent on overseas manufacturing. Amongst these, retail stocks are some of the hardest hit. For instance, there is Lululemon, there is Nike. These are all very popular brands. They're amongst companies with manufacturing ties to Vietnam. Now, shares of both companies have plummeted by more than 11%. There are a lot of popular shopping destinations for the average American, such as Target and the Dollar Tree, which has also seen their stocks fall by more than 10%. Luxury brands such as Ralph Lauren have lost nearly 16%. And you've spoken about Nasdaq. I'd like to point towards the fact that other tech titans, for example, Apple, which makes majority of its US sold devices in China, it's fallen by as much as 9.5%. In fact, $275 billion in Apple's market value has been wiped out. And there are other tech titans. We all know about Amazon, Microsoft, Nvidia. They're all down as well by 7.9, 1.5 and 6.9% respectively. But it's not just the tech industry. The tech industry is obviously very closely linked to the semiconductor and industrial companies as well. They've also taken a beating. For example, the Philadelphia Semiconductor Index has sunk more than 6%, with Micron Tech being down 11%. Remember, there was a major landmark deal signed between Micron Tech and India when the Prime Minister had visited the United States all the way back in 2023. Meanwhile, Broadcom is down 7% and Caterpillar and Boeing have dropped at least 6%. But it's not just large multinational companies and investors that are, of course, taking a hit from the tariffs. There are small businesses also that are faring worse. There's another index, not as popular as the three large indices that you've mentioned, Simran, is the Russell 2000 index, which tracks smaller publicly traded companies. It's down 6.1%. It has now lost more than 20% since its peak in November 2024. Remember, that's when the US elections were held. Now, it is very clear that the breadth and severity of some of these levies have dwarfed those imposed by Trump during his first term. Remember, he was very strict about tariffs then as well, but he's taken it up a notch right now. They now threatened to upend global supply chains, exacerbate an economic slowdown, and boost inflation as well. It's left a lot of investors struggling to game out what exactly the levies would do to corporate profits. So, of course, the larger questions that are now looming around is whether this is a harsh early verdict on Trump's trade agenda, and if the tariffs do trigger recessions, because people are fearing that. Will we see people scrambling for more bonds? Because it's very likely that central banks around the world will slash interest rates, which will eventually benefit bonds. So will we see people panic buying bonds? That is the larger question at the moment.
Thank you very much for, in fact, giving us this information and also, in fact, putting light on how the markets